this interaction. I've been here since yesterday as a part of the Government of India's program to reach out to various sections of the investing stakeholders and the global community based here. I do believe that there are a large number of very important and significant developments taking place in India. And it's extremely necessary that we discuss with all of you the India story and the kind of roadmap that we are on. I'll of course make a few preliminary comments, after which I think there could be some questions and an interaction. The last few years, when this government took over, were not particularly exciting for India. And I say this because we had followed a particular direction from 1991 till somewhere in the last decade. And the priorities seem to have been somewhat altered. Amongst things which went not exactly the way India would like them to happen, important decision-making came to a standstill. Policy got diverted on account of a large number of controversies which were raised. Probably the priorities of the government were also at that time different. This certainly had impacted on India's image both within and globally as an important investment destination. India has a great sense of resilience, and obviously there was a very strong reaction within the country. The country itself was looking for a change because this was not the roadmap that India would have ideally liked to see. And therefore, after a period of about 30 years, the last one was 1984, when India voted in 2014 a single-party government in power. The most significant aspects of the mandate were that India wanted decision-making, it wanted a decisive government, it wanted a leader who himself could be decisive. And I've said this repeatedly, that the mandate was both for our political party but also for the leader, for the reason that there was a lot of popular expectation from him itself. And when in May last year we've taken over, this is our 13th month in government, India has embarked upon that agenda. India is a very powerful democracy. It's also a very complex democracy. It's a democracy where you have to take decisions and you have to carry with you, even in your developmental agendas, the concerns of 25 to 30% of its people who live below the poverty lines. Otherwise, there is a legitimate expectation of those people as to whether the benefits of the entire change are reaching them or not reaching them. The government therefore embarked upon an agenda where we had to get the growth back. We were obviously faced with several challenges. Growth had dropped from our potential growth rate of 8.5%, 9%. We had dropped to sub 5% limits. Revenue growth was not very large. Decision making had come to a standstill. Corruption scandals were in the limelight itself. Several decisions which could have been ordinarily taken even then the government was not able to take. Now, in the midst of this, when the government started its business last year, how do we go rebuilding the credibility of the Indian economy? And hence we started on a program which had several limbs to it. And the first obvious one was, it didn't need much of a thought process to really get into that we had to open up whatever were otherwise the closed sections of the economy. We opened out more broadly on insurance, we've opened out on defense, we've opened out on medical equipments, which was for some reason a closed sector till now. We liberalized the real estate norms, and by opening out insurance, pension also gets opened out with it. And after opening up, and that's a process which is on. Only recently, the cabinet took a decision, because we have a very large body of expatriate Indians working in various parts of the world, and some of them are capable of making very strong investments. So investments made by persons of Indian origin, the OIC cardholders, has been equated to the NRI investment, and NRI investment actually has now been equated to resident investment. So that's also become a very important source, because the priority was that India needs that resource, and that resource must come itself. Our next challenge was easing out our processes. Have we accomplished that? I won't claim that. That's a process which is still on. And almost with every day we find areas where we had complicated our processes of doing businesses. But I think the silver lining is that process itself has started very rapidly. And it started not merely with the government in New Delhi, it's also started in the states. One of the key changes, both the Prime Minister and I described India, because we are a union of states, and therefore we popularly used to use the word cooperative federalism, that the center and the states have to cooperate. But we've added another dimension to it by saying that the regions in India are also in the process of competitive federalism. And therefore, if one region wants to grow faster than the others, he's going to liberalize his processes far more easier, that he becomes a target or a destination for important investments. And therefore, it's the states, some of them, at least 3 of them have taken the lead, which have started the labor market reforms, in order to suggest if some other regions don't want it, why do you want to prevent me from doing so? I'd like to target this area. Legal complications have been removed. Our Companies Act was a little complicated, though it was a recent piece of legislation. We've done one round of amendments. Hopefully we'll have to do some more. Our number of permissions are required to be now significantly cut down. Many of them are now going to be online. Our taxation structures need to be streamlined. And in the last 1 year, we've laid down a clear roadmap. And I'll just indicate some important facets of that roadmap. Our direct tax structures, the corporate taxation, is going to be brought down to 25%. That process begins next year. And every year, over a period of 4 years, from a 30% plus some surcharge, we bring it down to 25% to bring it almost globally competitive. The alternate investment trust models has already been put in place. And what is work in progress today is one of the most important indirect taxation reforms in India. This indirect taxation reforms is in terms of the goods and services tax, which will be a single tax structure across the country. I'm glad that most states in India have come on board and agreed to the proposal. The lower house has passed it. It's a constitutional amendment which has to be passed by both houses of parliament by a two-third majority. The lower house has passed it. Even though the principal opposition party wanted to somehow defer it by referring to a committee, I think the most significant part was almost every other political party, including the allies of the principal opposition party, supported the bill. And the principal opposition party also did not oppose the bill. They wanted some further discussion on it. It's now before a select committee of the upper house, which I am told by the second week of July, much before the next session of parliament begins, is going to submit its report. And therefore, work has significantly advanced as far as that area is concerned. Old pending issues, I'm sure a lot of you would like to ask me a question on that, which were legacy issues. The present government's policy is to distance itself from a large number of them. And the whole principle of retrospective taxation we have rejected. No new notices under those provisions are being issued, and old issues, whether on transfer pricing or retrospective taxation, one by one we are sorting out through the judicial process, and hopefully over the next few months most of them may be actually off the table as far as India is concerned. I think we are now dealing with sector by sector, and one of the objects was to bring transparency into the decision-making process of the government. And this transparency, for instance, power sector, coal, minerals, spectrum. Now, the present policy is that every discretion of the government has been virtually eliminated. And eliminating those discretions, the whole idea is that we put the conduct of business above board. We create a situation where the governments have no discretions, and except for discussing policy matters, or in case there is some unfair treatment to somebody, people need not even have to approach the government, because the process of people doing business should follow on its own stream and strength. Now, that's something which we have remarkably been able to achieve in a short period of time. The Supreme Court asked for a transparent system in the month of September, and by January, we had not only had a policy in place, we had implemented the entire policy, the auctions were completed, the allocations were made, production has started. As far as coal was concerned, the whole process with regard to mineral is on. Though much is made out of the fact that we don't have a majority in the upper house, at the end of the day, despite initial hiccups which are inevitable in any vibrant and functional democracy, there is not a single piece of legislation which till today has been defeated by the upper house. Slowly but surely all of them get cleared. Unless, of course, there is an unusual situation in a given period of process that this may not happen. We needed to rationalize our subsidies. And if we compare 2013-14 with 14-15 and compare it with 15-16, by a process of rationalization, not by any abrupt process, not by encouraging any form of confrontation within the society, we've been able to bring down the subsidy bill this year significantly. So if you look at the oil subsidies, as far as petrol is concerned, diesel is concerned, they are now linked to the market. In the LPG, people have to buy it at the market price, but there is a subsidy which goes into the bank accounts. Now, this efficiency by the process that we have been able to achieve. For instance, today there are about 125 million homes in India which are receiving the cooking gas subsidy into their bank accounts. This has been achieved primarily on account of the financial inclusion program which the government had started. Now, 155 bank accounts of weaker sections of the society opened up. This happened in a period of a few months. It's probably the largest financial inclusion program in world history. The second phase of this was that we put monies into those accounts. So all state supports are going into those accounts. For instance, as I indicated, the cooking gas goes into that account. As a result, all the duplicate accounts have been filtered out. So what we were paying subsidy for 17 to 18 crore people, that's 170, 180, it's now come down to 125. So almost one third or about 30% of them have been filtered out as a part of the duplicate accounts. So the state support itself, the net volumes come down. We are going to now take this forward in the direction of kerosene also, which is the last of the oil subsidies. Hopefully, if these experiments do succeed in some other areas which are subsidized, this experimentation could well be considered on a case-to-case basis. We've empowered the states hugely. And the empowerment of the states is that that's where the developmental activity takes place. And therefore, states in India today get more resources from the central pool of divisible taxes than they have ever got before. How do I, in view of all this, look at the basic parameters of Indian economy? Even in a state where there is a global slowdown, we are continuing to move at a reasonable pace. Our level of ambition is somewhat higher. So if India grows at 7.5%, you can be only marginally satisfied. You can't still have big smiles on your faces, because whether it's people in government, industry, or the Indian people, they realize our potential now is far bigger. We have increased a lot of expenditure and investment into infrastructure. Our basic parameters having stabilized in the first year, the growth being around 7% plus 7.5%, our target is to move up this year. Our fiscal deficit is 4%, current account deficit 1.3%, capital formation is also significantly improved, savings rate should be about 30%. It has to increase because that has to, we've survived increasingly as a savings economy. So with these basic parameters, inflation under control, how do I see the roadmap ahead? On the positive side, I see the fact that there's a huge amount of scope for improvement as far as manufacturing is concerned, as far as agriculture is concerned. So we are investing a lot into infrastructure. We could have brought down our fiscal deficit a lot more, but we didn't choose to do that this year because we don't want to cut down on expenditure. We are looking at sectoral problems of each of the industries. So a large number of projects over the last 4 or 5 years had become in what got called, referred to as the problem of stalled projects in India. Now, we have to address this, and this can't be addressed as a policy across the board. This has to be addressed from industry to industry. For instance, last week I had called the chairpersons of all banks, and we suddenly found that the largest number of NPAs were in the steel sector. So within a period of 1 week, we've taken 2 steps because the domestic companies were not being able to sell because of a lot of steel coming from Russia and China into India. So in terms of duty structures, those problems were addressed in 2 ways over the last 1 week itself. So we are looking at all those areas. Today, for instance, the leading Indian economic paper mentions that with the start of the highway construction, we are back to about 13 kilometers a day of national highways. Our target is about 20 to 30. 20 is the basic minimum, and we'd like ideally a target of about 30. The minister has been saying, concerned minister of the department, that he'd like to reach 30 kilometers a day. Now, we've made sure that a lot of money goes into these areas. The reduction in the oil prices certainly has helped us. It's helped us in containing inflation. It helps us in our fiscal deficits. It's also helped us while transferring a lot of benefit of the reduced oil prices to the consumers. to take a part of that money, convert it into an infrastructure cess, and divert it into highways, railways, rural roads, etc. So a lot of our infrastructural money besides the government budget is coming out of those sections itself. I've repeatedly said that we would be enhancing a lot of investment into agriculture. And therefore, with the increased investments, increased spendings, hopefully I'm keeping my fingers crossed as to what the fate of monsoons this year is going to be. Last year, we had two major crises. The monsoons were not good. And then in the month of March, we had a hailstorm over 8 states in India, which destroyed a lot of agricultural crop. Despite that, the volumes didn't fall. The increase wasn't there, but it was only a marginal increase. And our food management broadly is under control in terms of containing inflation. So it doesn't create a major crisis situation. But it certainly has impacted on rural incomes. And that's something which is quite visible. So now we've started taking steps to put a lot more resources into the rural areas itself. And hopefully if we are able to come out with the GST reform, along with an improved manufacturing and agriculture. And then the last variable, which is of course not within our control itself, how the global economy moves. Whether the global economy moves in aid of these growth rates. And our target really is from our present positions to move up in terms of our growth rate. And it's only then that I feel that we'll be able to achieve, not for a transient period, but for a much longer period, the inherent ability of the Indian economy to reach those growth rates. Our target, of course, is in long term to deplete poverty levels. We have a large number of governmental programs which are also attracting a lot of attention. The cleanliness campaign is attracting, has a huge support. Not only government, but I think the private sector and the whole country has adopted it almost as a national program. CSR funding has also become a very major source of funding as far as the cleanliness campaign is concerned. A provision for housing, a provision for toilets, a provision Digital India, the program for smart cities, which is now in its planning final stages before the tenders are out, I think has advanced quite well. Our financial inclusion programs have been a runaway success. I just mentioned the impact of the bank accounts being opened and the monies being transferred into them. We had for weaker sections of society 2 insurance campaigns because the penetration of insurance in India is very limited. So an accident insurance and a life insurance and a pension campaign for the persons who otherwise don't have a pension program. And in the first 33 days, I had the figures till last week. So the latest figures are, as of today, are not available with me. So in the first 33 days, the campaign was launched on the 9th of May. So as of the 13th of June, we had almost touched 110 million people being covered by the insurance campaign. So there is a lot of activity on the ground with regard to these campaigns itself. Some silver linings with regard to manufacturing. Last year, the figure was good, about a little over 7%. This year, the first 2 months have indicated much larger indirect tax revenues, which may be a pointer. We'll still keep our fingers crossed as to how in the coming months it expands itself. And therefore, if a push is to be given on the strength of all these reforms and extra investments into these areas, I think we could position ourselves on something which is much higher. And therefore, compared to many other global destinations of investment, India itself should be now back on the radar. And that is the real purpose why I'm here. Thank you very much, and I'm sure there will be some time to interact.
Terrific. Thank you very much, Minister. We will take some questions from the audience, but I was hoping to just lead off with a few. First, you mentioned the GST transition, but if you could lay out a little bit more the current thinking on the revenue neutral rate, how we're going to get to April 2016 and have the GST in place, and so on, because that's an issue of much interest to the international world too.
You see, over the last 7-8 years, when the dialogue with the states went on, the object behind the GST was that both the center and the states would surrender their legislative and executive competence to tax to the GST council which would be formed. And therefore, those negotiations were very delicately poised because you had to carry all the states with you. Now, barring one state which has some conceptual issues, Tamil Nadu, broadly all states were on board. Of course, there were pulls and pressures because the interest of every state is involved. And whenever you call the states, it's absolutely necessary, having agreed to all the proposals, and what we have on the table now is almost a consensus proposal. But every time a meeting is held, the states must restate their position itself. So I take it as a restatement, not a disagreement with the GST. Now, GST is a concept where it's a consumption tax. And being a consumption tax, the consuming states in India would be the beneficiaries. So in terms of an interstate equity between them, it's the consuming states which are going to benefit. So the producing states wanted a little comfort level. So there were some issues on which the states had to be brought to board so that a deal could be struck. So one product had to be kept outside the GST, which was alcohol, because almost all states were united in that. Petroleum products, some states wanted it to be kept outside. We did not agree. It's within the GST. But the taxation on petroleum by the GST Council would begin once the consensus is reached within the Council. The voting system in the Council is 2/3 vote for the states taken together and 1/3 for the center. But for a decision to be enabled, you need a 3/4 majority. Therefore, the states themselves have a veto, the center itself has a veto, and it's only when a broad consensus is reached. So you could do it with one or two states dissenting, but if too many states dissent, you can't do it. And with the center dissenting, certainly you can't do it. So that's the process that we have followed. Now, having brought them on board, the GST has a checkered history. It spent 2.5 years in the standing committee in Parliament. They made some suggestions and it went to the Lok Sabha. The lower house, after a discussion, cleared it. What most of the amendments we've accepted were the ones which were suggested by the standing committee itself. But somebody in the principal opposition party had already announced that they wanted to revisit that position. Now, revisit not to take a contrarian position, but I really have not been able to understand what the motive was. And therefore, despite their absence, we had a clear 2/3 majority. In fact, we had much bigger than a 2/3 majority in the lower house. We carried it. We could have even carried it. I counted the numbers in the upper house. I could have counted it if the principal opposition had walked out of the upper house with the support of all other political parties. I was comfortably placed in terms of the numbers. But I consciously chose to agree with the principal opposition party on referring to a select committee because there are a large number of state governments which that party controls. And therefore, I needed the cooperation of those state governments also in order to implement it. That's the pressures of a democracy on you. And therefore, the select committee seems to be proceeding quite well. Now, on a point of caution, two facts. Hopefully, if this is passed in July, then we have to hit the 1st April 2016 deadline. We need 3 supporting legislations, the drafts of which are almost ready. We need to clear those drafts, and we'll have only the remaining part of the July-August session and then the December-winter session before we pass it. And then the IT backbone has to be got ready. I took a meeting recently with the people who are doing it. They are reasonably confident. So as far as the central government is concerned, there is no.
That's the finance minister trying to reassure global investors, particularly investors in the US, that the GST bill is on track. Lots of announcements coming in there, including the fact that he thinks that India can grow at a better rate than the current 7 to 7.5%.